Two other companies that we're watching very closely are Ford and General Motors. As the companies negotiate with the United Auto Workers, the two sides are racing to avoid a strike as the Thursday midnight deadline approaches. A possible strike could change the auto and economic landscape in the U.S. Jose Munoz is Hyundai and Genesis North America President and CEO, as well as Global COO for Hyundai. He joins us now. Jose, great to have you on the program. I wonder what you think of these negotiations. Of course, you have non-union work, and on the one hand, that's great because lower costs for you. On the other hand, if they get a bigger contract in Detroit, you could see an already tight labor market get tighter. How do you see it?
Well, thank you for having me, Matt. Well, first and foremost, we just want the best for the industry, right? We don't have unions today in the U.S. because this is what our workers decided to do, basically because our strategy has always been, and it will continue to be, to try to offer our workers the best possible conditions. So, in fact, I was 2 weeks ago in Savannah, Georgia, where, as you know, we are making a multi-billion investment for the company, about $12 billion in total. And then we found out that according to the county, our wages are about top 25% in the area. So which means that good wages, good health conditions, good paid holidays, etc., is the best guarantee to succeed. Also, I would say that we have unions in Korea, and we've always tried to provide our workers with the best conditions. We found good agreements so far in the last few years. Thankfully, we had no strike. So we wish the best to everybody because any disruption would have potentially impact in the supply chain. Although the last 2 years, we've learned a lot how to be less reliant on one or another supplier, and also we are a very much vertically integrated company. So I hope things will end up in good place for everybody, and we'll continue to produce cars and sell cars.
Jose, you got products that are hot right now. A lot of people normally who would be looking for a luxury vehicle are going instead to Genesis, or maybe Genesis is just stepping up and making luxury products. In terms of Hyundai, you've got the Elantra N making a splash, the Santa Fe plug-in hybrid, as well as my personal favorite, the Ioniq 5. But are you also able to undercut your competition in terms of pricing? Because right now, car makers in America, or car buyers in America, I should say, are facing very high prices.
Well, you're right, Matt. We are very proud with the good achievements of our luxury brand, Genesis. I was, in fact, looking at some data before, and I found out that since we started in a full year in 2006, we have increased our volume 8x till last year to more than 56,000, and hopefully this year will go well above 60,000. So good design, good technology. I wouldn't say our cars are the cheapest at all. We just want to offer the customers the best at a competitive price, but it doesn't mean the cheapest. I think the electrification is something that is helping us and is helping our customers, and they're realizing that we have a very compelling offer in the market. As you mentioned, Hyundai with the Ioniq 5 and Ioniq 6, which have been 2 years in a row the workout of the year, I think they're very good offers, and then we're trying to do our best to compete in the market, even if our vehicles don't qualify for IRA other than on the lease segment. And, as you know, we became last year the third global OEM in sales, and with more than 6.8 million. And then these first 6 months, we continue to be the third one. This is driven by the U.S., where we are only behind GM and Toyota, as you know. So far, so good. We'll continue to do our best with everything that we got. But product quality, good design, good features, I think is the best guarantee to success.
You know, you mentioned the possible supply chain disruptions from a potential strike in Detroit at a time when electrification, as you noted, is such a priority for so many of the auto makers. Have you put, Jose, any estimates on what a strike could cost the industry internally? Have you guys put together any numbers on what that potential cost could be?
Well, we don't. We, I think, master the couple of last years during the pandemic, where our company, I think, did a better job than others in terms of finding alternative sources and maximizing the flexibility of our systems to continue to supply vehicles to the consumers, right? And nowadays, as I mentioned, I think we are in a better position than we were just 2 to 3 years ago in terms of having alternative supply, especially in the North American market, namely in the USA, right? So also, we are very vertically integrated. Our companies like Mobis or Globis that are supplying to both Hyundai, Kia, Genesis, they're very, very strong. And after, all this 12 billion investment in mainly Savannah and Bartow in Georgia, I think we're going to be even more localized. But I'm very pleased to say that we're so confident that today we're announcing here in Detroit, Michigan, the grand opening of our, we call it the STEEL, Safety, Test, and Investigation Laboratory, where we believe we're going to have the state-of-the-art, the very best facilities to do this. Most of our competitors do this through third parties. And according to the president of IIHS, I think probably we have the best facilities in town.
One of the other issues that comes up with Hyundai today is competition from Chinese automakers. What would you say to those who are curious about how your company is positioned versus some of those fast-growing players?
I think mainly in the European markets is where we can see that competition, also maybe in the Middle East, not to mention China, right? But so far we've been able to weather that quite well. So again, the European consumer, the Middle East consumer is appreciating the design, the quality, the safety features, competitive prices without discounting, and more importantly, a great service. I think the consumer is appreciating the fact that we put the customer first within our big image of the progress for humanity. So when they compare us to other, as you mentioned, Chinese companies and others, they realize that if they ever have a need to service the vehicle, probably they will be much better taken care of by Hyundai than by some of those competitors. We don't neglect them. We need to continue to do our job because they have improved a lot, but we like the competition and we'll try to do an even better job.
Tesla cutting prices in China, but here as well. I asked earlier about whether or not you can undercut competitors with price, but do you have any room to cut prices at Hyundai and Genesis?
Well, we, as mentioned, try to focus on offering value. We don't want to be the cheapest in the market. We want to be simply competitive. There is always room if you look at the financial results of the company, but definitely our strategy is to optimize the revenue, the margin within the capacity that we have, and this is what we've done the last few years, and I think the results are showing that. So we'll try to maintain our position. We are not having plans to cut and slice our prices.
I'm seeing headlines here, Jose, that Bernard Looney, the chief executive of BP, is going to resign less than 4 years in the job. This according to the Financial Times. I bring this up with you because I have asked Bernard Looney, why don't they put EV chargers at every BP station? Gas stations all over the place, but I can barely find a charger. And you're pushing, electric vehicles. You had an ad during the kickoff of football with the all-new Kona about getting back into the commute. How do you convince buyers to switch to EVs when there's difficulty in charging, especially, when they get to work? In my garage here, they'll charge me $20 a day to plug the car in. So, that's just the same as paying gas.
Well, in fact, the consumers are very smart always, right? And then to your point about the Kona EV, it's a great design, great autonomy, It is having a great driving dynamics, fantastic safety features, and then we are making really extraordinary efforts to satisfy our consumers' needs. For the time being, as you know, we offer on every Hyundai that we sell 2 years of complimentary charging within Electrify America, and then 3 years for the Genesis brand. And as we speak, as you know, we signed recently an agreement with other 6 or 7 OEMs to create Iona to guarantee that our consumers will continue to have the best conditions in order to charge their vehicles. On top of that, we are thinking on potentially launching our own specialized and high-level service charging chain for our Hyundai and Genesis consumers. And our dealers, all the Ioniq dealers, have invested in level 2s and even level 3 chargers. So I think the consumers are realizing that the ranges are getting longer and longer. The grid is getting better and better, still some room for improvement. And you know, the fact is, for example, you look at the numbers that we had in August. In August, we sold about 20% of our sales were electrified vehicles, including EVs, hybrids, plug-in hybrids, and hydrogen. And this represents 50% more than a year ago. But 10%, it was battery EV, and it was 100% plus versus a year ago. So the consumers see the value and they're buying EVs.
Jose, thanks so much for joining us. Jose Munoz there, Hyundai and Genesis North American President and CEO, as well as the global COO, I should say, for Hyundai.